S&P rocketed today after the Fed meeting. We can see how we tested that 40-50 level and then just exploded. I'm going to do this on the hourlies with the E-minis just because it's easier to see. Now, this was our level, this 4100 right in there. Unable to break, got over, unable, rejection again, and today finally pushed through. This has been a base since about the 23rd. You broke out, tried to break that base, popped back over, came back down, retest, and now you're through. Subscribe to the channel, click all notifications. What we go over here is actionable. We go over actual ideas and walk through trades, the indexes, key levels. As I like to say it, we deal with something called reality. Left shoulder, head, right shoulder, neckline. You're up over your neckline. It's not debatable. You are up over your 200-day moving average. 200-day moving average is crossing your 55 in white to the upside. In Monday's video, I actually walked through these golden crosses and death crosses and then the probability of breaking them down. I recommend that you run a back test yourself to see how accurate these really are. To me, they're pretty much the standard in technical analysis as just a guide to which way I should be looking at the market, and this is glaring. Meta releases numbers this evening. Very good numbers considering all things, and they just happen to be doing a $40 billion buyback. 180 is the neckline, and they're already getting over that neckline this evening. They have a clear shot to 200. There's very little to say here. You ran up, you got to the 200. Everybody wanted to see earnings. Here they are, and the stock's up over $30 after hours. This is not going to go away now, so you'll probably see this very active tomorrow with institutions. Obviously, it'll bounce around, but this would be something where I would be looking to be net long. I would not be looking to short it unless you're looking to scalp it on the downside. But you can see how powerful that move is, that you're actually up over 20%. Let's call it 17%. Not a bad after hours trade. So a lot of people thought about Snap and we're talking about it thinking that it was going to be just like Snap. And we actually went over it in yesterday's video where we're talking about what we were doing in actually the Alpha Chasers community and saying that this was actually a buying opportunity and to buy it after hours. 145, 146 now. Nobody knew it was going to do this after hours. So whether or not you held into there or not is obviously, you're taking a tremendous amount of risk. It could just as easily gap down $30, right? So you have to protect your capital, but it might have given us the chance to get up and in the trade and then maybe marry a put to it to hold it in there and then just risk the profit. So sometimes there's ways to do things like that. Right now, we just got to see how this trades tomorrow and find a way in. Very clear. I mean, there's very little reason to talk about anything in regards to the earnings or anything. I mean, the bottom line, they're buying $40 billion of their own stock back. End of discussion. Tesla, we went over yesterday and we're going to go over it again today. Please comment on these videos. It's why I'm going over some of the same names that we recently went over because you asked for follow-up and that's what I'm doing. I also got asked for live trades and to post some other types of content about my trading day, things like that. And I will be doing that in the future. Just trying to figure out the right way to do it. So you get up to the neckline, you try to break it, you can't, you come back down, you test. But as we were talking yesterday, this is a piercing pattern. So in other words, we undercut and then we get above here, we get above 50% of that bar, boom, there is your move. And then here you go. Now you're breaking out. Where could this get to? You can get right back to that neckline. That neckline is 207.26. As a matter of fact, if it doesn't get back to the neckline, I would be shocked. It was going to take some kind of event to not get a test of this. At a minimum, get a test of 200. But I do think that you get a test in here. Now, this is something that we went live in the Alpha Chasers community. See this bullish engulfing down here? See this undercut? They've been doing this to us left and right. They've been undercutting key levels. They did it right into Powell's speech, and then they reversed it on you. Bullish engulfing right there, boom, it provided a great entry. So your entry literally is the top of that bar right there. And I am going to do more educational videos. I'm actually working on a series of them right now. And then you would use that low as your stop, right? So as soon as it flipped, it was on. This was a very easy trade for us. And then you just let it go and you watch what Powell says and make sure he doesn't say anything stupid, and he didn't. Matter of fact, he was very dovish today if you look at the language. People are going to argue this on social media. It really doesn't matter what they say. The bottom line is if you look at this on a 2-minute chart, this is when he started speaking. 3-4 minutes into his speech, the market ripped. He was dovish. We can debate anything we want. And then, as I said earlier, there's something called reality. and I like to deal in reality. It went very well. His speech went very well, and the stock melted up and took out highs. This is something that you can build off of. It doesn't mean that you have to jump in here because we're up 2.5% today, but not understanding when he's dovish or hawkish and then coming out and trying to reword what he said. It's silly. It was positive. Accept it, move on. Too many people are tying their ego. PGTX is one I would have on my radar. We started this today in the newsletter. If you don't get the newsletter, there is a link in description. But we started this with a live trade today and a swing position, and I'm just going to walk you through exactly what I saw. I'll show you this on the daily, and I'll show you why this move's not over. But you see these gaps in the chart that are right here? There you started gapping up as if you couldn't get in fast enough. You started gapping over the previous close of the bar. Once you start to see that, I got very interested. So we actually took a position around here, and then we just let it trade up and let it do its thing. This is all 1 minute bars on a 1 minute chart. But the reason I wanted to start with the 1 minute is this was very telling. When you start gapping up over previous bars, that just means that you have so much buying. Look at this dragonfly. Look at these gaps. So when you start seeing that, they have so much buying pressure that they can't even keep up. They just keep jumping their orders, right? So in other words, they just keep jumping their bids because they can't keep up with what's going on. And that's pretty significant. We haven't seen that kind of action here for some time. Invitations will be going out probably either this week or next week. Then it'll shut down for a undisclosed period of time. The market's going to start ramping up here, and I can just tell that I'm going to be very busy with the action. Same exact pattern, MGSM. Now this is one we went over last night, and we talked about breaking above this core level. And then if you did break above this core level, that it was going to provide an opportunity. There was a lot of trading pre-market, actually got up to $80. We did quite well with this. I mean, it was pretty excessive, to be blunt. See how you all of a sudden just gapped up right over that level? That's all you needed to know. So if you start looking at this, you can just determine where the pressure's coming from. That's why you have to watch the halts. Now, this wasn't a halt. This just moved on that news of the secondary. And then when everybody realized that they were still short and they weren't going to get a piece of the secondary, what happened? We gapped up. But I wanted to see if we were going to form some kind of support, and we kind of did here. So this provided an entry for us, and we took it, and then we just scaled out. One thing when you get a hold of these monsters, what you're looking for is you're looking for a data point pre or post where you can define where you either had some kind of support or some kind of breakout like you did here. Then you cupped and ran. And then you look at those levels and then you see how you act there. See how we stopped right in there? That let us know that we should be scaling out, and then we're getting wicks. And we know that wicks are price rejection. So because we're getting wicks into price rejection, into resistance, we're scaling out into this. We're hoping we're wrong. We're scaling out into this. And then you have this gap down. That was pretty much it. That was all she wrote. But I would not rule this out again. This is us on the hourly. And I just want to point this out. I think it's pretty glaring, but let's just point this out. So we get rid of the pre and the post, and we can see that level right there. So as we talked about yesterday, you have this high, tight flag right in here, right? You have all this consolidation. We said if we flip that level, we should get involved, or you could get involved if you wanted to, and it worked. What you're seeing now is you're seeing us come down, and now what are we doing? Now we're curling. So it's not like we're just completely breaking down. Now there's a pretty clear level here that you should watch tomorrow and see how you act at. And then you want to see maybe if we get an hourly close above that. So if we can get an hourly close above that 37.61, this could move, because I don't believe that all the shorts are out of this yet. I really don't. As a matter of fact, if you take a look from 2:30 on, that's when it became active into the close, right at the same time as the Fed. It's not like people are going out there and being net buyers of MGSM because the Fed is slowing down cutting interest rates. This is people that are short that were hoping that it was going to keep rolling down, or maybe that the Fed was going to have a bad day or create a bad day for us. Make sure that you are getting the newsletter, link in description. We're going to start being much more active, and I revamped it. Right, it hasn't gone out for a couple days. I just sent one out yesterday about the home builders, but make sure that you're getting it, because we're going to start being a lot more active because what's going on in the market. And there's going to be a lot more opportunity, quite frankly. So what I'm getting at with this is the socks, and this is a left shoulder, this is a head, this is the right shoulder. Here's your neckline, you broke it. That's a golden cross. Okay? There has never been a time where the market has gone down for a considerable period of time in a downtrend, and the socks have a golden cross and be breaking out. It just does not happen. Okay? Doesn't mean we don't get pullbacks, but until this reverts, okay, you need to have a net long bias. That's the way that I view the world right now. If you look at the NASDAQ and you see the W, you see how we closed above the W and we made a higher high over the 200. We're still far apart and we're not near that cross yet. And the NASDAQ always lags. It just does. Okay. I don't know how this plays out. I don't know if second half earnings are going to not be what we expect them to be. I do know in trading that I'm not going to watch 10% happen on the NASDAQ and then wait till June to say, see, I told you we were going to roll there. So that's not a good strategy. Okay? Your goal as a trader is to make money every single day. So you want to look for these kinds of things. And when you see them, you want to act on it. We'll just ask you that please go through this chart, go look at the past 20 years and find a time where the semiconductor index had a golden cross and the NASDAQ went down. This is the financial space. You have a golden cross sitting right in here. This is the financials on a weekly time frame. Here's the great financial crisis. Here's the pandemic. Resistance becomes support. It's very clear what's going on here. There has never been a time, and you can go back, you can actually go back even further than 20 years. There's never been a time that we have had a golden cross on the financials and had a prolonged period where the S&P went down. This would need to negate in order for that to happen. That's why you're seeing the buoyancy. If you noticed, you're seeing buoyancy when these pull back now. They're not cracking as much. You want to watch this. Head and shoulders, inverted, breaking the neckline, closing above it, golden cross. These are just the facts. Everybody have a great evening. Please comment on this. I'm trying to give you more of an understanding of what's going on. When the indexes turn, it's like turning a ship. It moves a little differently. It's one of the reasons why you're seeing names like IWM, why they moved first, because they're small caps and it's easy to turn a smaller ship first. Whereas something like this might take a little bit longer.